to the Mortgage Heroes weekly podcast, where we talk about how you can win in real estate and mortgages. Each week, we have a new topic that we bring to the table where we discuss, share opinions and perspective and insight that helps you bring forward the most important items to the table. Nice. I'm Brian Landeros with Mortgage Heroes, and today we have none other than
Will Flores.
So today we have a product highlight. This week is really relevant to what's happening in the market. And in real estate right now, with high rates, this is something that you definitely want to use to your advantage.
Yes.
So today's topics is going to consist of the 3-2-1 buy down.
That's great, Brian. And sorry everyone, we're missing. As you guys can see, the guy that loses his hair because he's just a brain. So, we're missing him. He's out having a good time. Finally take some time off.
Of course, hopefully getting some sleep.
You know what I'm saying, Brian? So, but here we are. We still got to continue to talk about mortgages because we have to bring this information to help you guys make the best decision possible for you and your families as you're searching for these homes, right, Brian?
Right. So today's topic is going to consist of what a 3-2-1 buy down is, how people are using the 3-2-1 buy down in this market, and the advantages of the 3-2-1 buy down.
Wow.
But first up, what the heck is a 3-2-1 buy down, Will? what is this? You know,
it's like when the market changes, Brian, one of the things most people don't understand is we have to be creative. We have to be creative in the way, how do we just entice new home buyers, even with higher interest rates? How do we get them into their new home?
Well, that's exactly what the 3-2-1 buy down does for you. And essentially what a 3-2-1 buy down is a financing method that helps you bring your mortgage payment 3% down, three mortgage rate percent down.
Yeah,
the first
3%.
Year, 3% down the first year, 2% the second year, and 1% the third year, which the fourth year going back to the original note rate that you receive. So essentially, it's just a product that helps you bring down your monthly mortgage payment for the initial years of your mortgage.
That's correct. That is correct. So there is a 3-2. Right, a 3-1 buy down. I'm sorry, a 3-1 buy down, a 2-1 buy down, and a 1-1. So really, Brian, it all depends, what your realtor negotiates.
Of course.
The most common one that we do see is a 2-1 buy down.
Correct. So one of the things that, we get a lot of questions on is this something that requires a credit score requirement? Like, is there a certain score you need? Is there any extra down payment that you need? And what kind of loan is this? Or is this something that gets added onto your mortgage? How does it work?
Well, Brian, I'm not sure if you're doing this as a trick question, right? But we always need to run credit because it's a Fannie Mae 30-year fix either way you look at it.
So not necessarily did I mean the credit, but do you need a credit to get that feature?
Oh, I see.
Yes.
Do you rent a credit? Here we are. Look at this.
Do you have to get approved for that feature? Or is that something that goes along with your approval or different than it?
To answer that question earlier, the reason why I brought it up like that, it's not that it's in a joking manner or anything like that. Actually, what does happen, a lot of people think, well, it's just a different type. It doesn't conform to the Fannie or Freddie Mac guidelines, So in this case, it's a regular 30-year fix mortgage, which does require just, the same qualifications you would as a standard type of loan.
Perfect.
Okay?
So as long as you're able to still get approved for your regular FHA, VA, or conventional loan, everything, you meet all those requirements, then if your realtor is able to negotiate this, then shoot.
And that's all it is. So that's exactly right. What it is there's a misinterpretation out there that this 2-1 buy down is actually an adjustable rate mortgage.
And I've heard that a lot because you're like, what?
Yeah.
My rate's going to go down, but then it's going to come up?
Yeah, I don't want the same thing to happen back in 2008.
Yeah,
there you go. Exactly. So that's the thing, Brian. It's not. It's a 30-year fix. It's a subsidy payment that the seller is going to contribute towards for you. So let's just give an example here. On that 2-1 buy down, your interest rate starts at 6%.
Okay.
The first year, your payment's going to be a payment of 4%. Okay. Then the second year will be at 5%. On the 25th month, it'll now go to the 6%.
And hopefully by that time, rates figure it out and we're able to refinance.
Exactly. So what's great about it, the person that's going to contribute is actually the seller.
Yeah.
The seller would contribute to this. Make sure that they're...
We'll get into that because that's some of the things that we have right here of how people take advantage of it and how people are using it to their benefit.
Yeah.
So let's go ahead and get right into it. So how are people using this 3-2-1 buy down, 2-1 buy down, or 1-1 buy down, and how are they using it in this market?
Well, they're using it, taking advantage of the actual market that the sellers are willing to give some type of credit. Enticing them. Buy my house, please.
Buy my house, please. And the one thing that a lot of people fail to understand is that only the seller can pay it, correct?
That's correct.
The buyer cannot
contribute to that.
The lender cannot.
Correct.
And neither can the buyer's agent.
Correct. Well, the lender can with an interest rate, right? As a lender credit. There's ways we can participate in that.
Got it.
But the norm is there's not a lot of lender credit to get right now because rates are the way they are, right? So the best thing to do is negotiate it from the seller.
100%. And number two, I've seen sellers use this, like you said, as a tool to incentivize buyers to stay motivated, to want to ease into home ownership and still feel like they're confident into getting to their house.
If your house is sitting for 15, 20, 30 days and it's not the norm, we saw houses selling within
weeks.
Not even weeks. It was like 5-10 days. There was actually, Brian, last year, the average days on market was 10 days. In some of these areas, it was just like, and you had multiple offers, right? So now with rates going up, they started, in February of last year, things kind of started changing, right? The rates went up the fastest, the highest in history that we've seen. Okay. So now a lot of sellers decided to sell. Well, let me wait till after the holidays or let me just wait before the holidays where the house is sitting. So how do we actually get a buyer in here now?
Got to make it enticing. Got to make it motivate these buyers.
That's it. And how do we as lenders stay also busy is we have to understand these products to make them available to the consumer.
No, 100%. So let's dive deep a little bit further into what a 3-2-1 buy down does as far as the advantages for buyers or sellers.
Yeah.
So one of the ones that I think is, the most important one is that you get a lower monthly payment,
of course.
Right? So each year your monthly payment is going to be different than what your original payment will be, but that lets you, ease budget and kind of get, acquainted with what your mortgage is going to be and your new responsibility.
That's correct. The great thing too about this actual financing tool is that you're getting approved at the 6%.
Yeah.
So you already know what that's going to look like.
Exactly.
So having a lesser payment by 2% lower, you're not buying down the interest rate, okay? Because that's another misconception.
Yes.
I'm paying points to buy down the rate. This incorrect.
Is not it at all. You're not buying down the rate with
Correct. Exactly. And that's why it's adjusting every year. So that's a misconception out there. But what it does is you have a lower payment.
Yeah.
For a whole year. And then we're banking, knocking on wood, that the inflation goes down so that rates could go down. And within 12 months, what'll be fantastic about that is if they refinance.
So hopefully by next week, this time, we will already know what the inflation reading for the beginning of 2023 will be.
It'll be tomorrow.
So we'll see. We'll see.
Yeah.
So we got exciting things coming up. And I feel this year is a year where it's time to plan, to get really reacquainted with what your goals are going to be and have intention, like our partner said yesterday.
That's it.
So that word really just kind of like, sparked something inside. I feel all of us where it's like everything that we do, not that we didn't do it with intention, but sometimes you get caught up in the mix of doing everything and you kind of go back to the to the basics and just really realize why you're doing this. And I feel this podcast is what allows us to connect with our clients, to connect with our audience, and really just give them a honest and a very easy to digest way of what's really going on with mortgages, because I know it's difficult to understand and I know it's a different world over here than it is over there. So it's like, the more that we're able to break these topics down, be able to give you real life examples, I feel that's the best way people are going to be able to succeed in this year.
There you go. So an example here, we actually just closed on the property for $1.5 million, $35,000, right?
Okay.
Seller gave us a whopping, take a guess. Nope. Forget it. $50,000, B.
What?
Yeah, exactly.
What?
So that's what the market is doing right now. It's giving these type of credits out there because they want to incentivize. They need to move forward on that next goal that they have.
Of course.
And so, hey, I'm looking forward. How do I do this? I'll give you $50,000. $35,000 of that went towards that 2-1 buy down, which is great. Then the other $15 that went for closing costs, client only came in with $2,000 on a, come on, who does, Brian?
$1 million house?
Yeah, exactly.
Oh, no, what?
1.5, $35,000.
$35,000 and I just paid $2,000 to get in the house.
So that's an example that we're able to use, right? Again, the difference what it is, where that $35,000, it's a subsidy. Mm-hmm. So what happens is when you make your mortgage payment, Brian, that money is in a separate escrow account.
Right.
So your actual payment is always going to be at that 6%. Even though you're paying, the consumer is going to be paying that 4%, the bank has the remaining balance right there. They're sending a payment at the 6%.
To offset the payment.
So it's a fully amortized 30-year fixed mortgage. So you're paying your property off just as you will a normal mortgage.
Nice.
Hope that makes sense.
No, that makes perfect sense. Essentially, this program is just going to help you bring your monthly payment down, and at the end of the year, at the end of the term, you'll go back to your regular payment.
That's it.
Now, the one thing that I do want people to understand is that this doesn't cost anything to you, and it's a tool to help you out. So when you're speaking to your realtor or you're speaking to real estate professionals, ask how this could benefit you.
That's
and if
correct.
that's something that they're going to negotiate in the contract when you're out shopping for houses.
Yeah.
A lot of times, since this is something very relatively new and people are starting to barely catch on, even though last year it came out, I still feel a lot of people don't know how to use it or feel, hey, if I put this in the offer, it might not get accepted.
Yeah.
But right now, the best thing is to ask for as much as you can, because eventually you're going to get something back. But if you don't ask, you don't get.
That's right. That's right. And a lot of another misconception, there's a gimmick behind it. It's not. This is actually through Fannie Mae and Freddie Mac.
Yeah. So it's not like, something we just made up and said, hey.
Exactly. That's what it is. So for me, it's a great tool to be able to leverage right now that sellers are willing to, cooperate and help you. The other thing is, a lot of times they're saying like, well, what if I don't need that? If you don't need that, that's fantastic. And what if I want to just ask the seller for less of a purchase price? You could also do that.
Yeah, of course.
So one of the things how I always explore this with the client is, well, let's see what benefits you most. A lesser payment monthly right now, or let's say they get a $20,000 deduction from their mortgage.
Right.
Here's the difference. We got to use examples so it's better understood. For every $10,000, I'm going to estimate about a $65 difference in monthly mortgage payment.
Okay.
Whereas if you go with the 2-1 buy down, that could be anywhere from $500 to $1,000 difference a month.
Of course.
So it just depends how you want to leverage that. Do I take the $20,000 less from the purchase price, or do I offer full price and ask for that $20,000 for the 2-1 buy down? So there's different ways how to
skin the cat.
That's it.
No, it makes perfect sense. And that's why it's more important than ever right now to sit with your realtor, sit with your lender, and really discuss all your options. Run the numbers, higher, lower, in the middle, so that you have an idea. You're not surprised by the market fluctuating up or down, and you know an idea of what you can expect at the best case scenario, mid case scenario, and worst case scenario.
That's it.
So we're getting here towards the end of this podcast. Will, is there anything you want to say before we go ahead and
absolutely. Knowledge is power
100%
when applied. What we like to offer is just DM us, and we'll provide you a copy of this calculator where you could actually just go in there. And if you're looking for a certain sales price, you could plug that number in there. You can let us know, more what type of financing you're going with. We'll give you an idea what rate. And then all you plug is those two things in there, Brian, and it'll give you a breakdown what a 3-1, a 2-1, and a 1-1 will look like.
Perfect. So make sure if that's something you want, reach out to us. But thanks for listening to the Mortgage Heroes weekly podcast. If you need to ask us anything, reach out to us online on Facebook, YouTube, or Instagram, or email by phone, by text, or send us a smoke signal, whatever you got to do to get a hold of us. Remember to share this with people that, can find value in this, and people that you care about.
Yeah.
So thank you so much for tuning into this week's podcast, and we'll see you guys next week.
That's it. Thank you guys.